China is the world's second largest economy, and its growth has been instrumental in helping the world recover from the Great Recession. But as China's economy continues to grow, it also faces risks that could threaten its continued expansion and cause a global recession. If China's economy collapses, the world is doomed. If China fails economically, there will be worldwide repercussions. Unless we see a global intervention take place, which would be an unprecedented event or series of events. A May post by The Guardian revealed that Li Keqiang, premier of the State Council of the People's Republic, has warned that the China economy was facing slowing growth, and this is primarily due to the zero-COVID policy placed by the government in the country. A collapse of Chinese markets, corporations, banks, and currency would have dire consequences for every country on Earth. It is not simply because China is now our second largest economy, but because its collapse would reverberate through every other part of our interconnected world. According to a post by The Balance, China contributed $23.01 trillion of the world's $125.65 trillion in gross domestic profit, GDP, in 2020. That's about 18.3% of the GDP, which means that if the China economy experiences a collapse or slowdown, every country in the world will fail. The post also revealed how the COVID-19 pandemic affected China's economy by reducing its growth rate, which was at 10.6% in 2010 to 2.3% in 2020. However, even with that drop, China's economy was still able to flourish than many other countries that were less affected by the pandemic. Welcome to Savvy Economists. In this video, we will discuss how a possible China economic collapse can ruin the whole world. Don't forget to please watch, like, and share this video if you enjoy it. Also, leave your comments and thoughts below, and don't forget to subscribe to the channel for more related content similar to this. The world is increasingly interconnected, and the global economy is more reliant on China than ever before. China is the world's largest exporter, and its economy has been growing rapidly in recent years. However, there are concerns that the country's economic growth is unsustainable and that a sharp slowdown or even a recession could be on the horizon. Most countries' economic fortunes are enmeshed with China, and their fortunes have a huge impact on the well-being of countries all over the globe. As the world's largest exporter, a significant portion of the globe relies on Chinese exports for their own economic growth. China's economic health is crucial to global stability. A decrease in demand for Chinese exports would cause a domino effect around the world, as other countries' economies would contract in turn. From Australia to Nigeria, nations have come to rely on Chinese demand for their exports and investment in their infrastructure. According to a post by The Punch, it revealed that based on a report by the National Bureau of Statistics data on foreign trade, China plays a major role in the imports of goods into Nigeria. The post also revealed that from the first quarter of 2018 to the first quarter of 2022, Nigeria's imports from China rose by 183.91%. Also, China is a major holder of U.S. debt. If China were to sell off its U.S. debt holdings, it would trigger a sharp decline in the value of the dollar, throwing the U.S. economy into turmoil. A post by the U.S.-China relations showed that a sell-off in the bond market would be triggered if China decides to begin dumping U.S. debt, and the resulting effect would not only lead to U.S. interest rates being high but also hurt their economy. Also, the U.S. dollar could experience a fall in price against the yuan. Given its size and interconnections with the global economy, a collapse of the Chinese economy would be nothing short of disastrous for the rest of the world. There would be a decrease in demand for commodities, leading to lower prices and less income for commodity exporting nations. China is also a major source of financing for infrastructure projects around the world. If its economy faltered, this flow of capital would dry up, making it harder for countries to fund much-needed development projects. The ripple effects of a Chinese economic collapse would be felt worldwide, and it would plunge the world into a recession that could last for years. China is a two-way trading partner of most countries, providing them with the goods and services they need while also receiving the goods and services they need in return. This mutually beneficial relationship has helped to improve the standard of living for people in both China and the partner countries. The economic growth of China has been a boon for the global economy, and its two-way trading relationships have played a large role in this. By providing other countries with the goods and services they need, China has helped to spur economic growth and development around the world. In return, China has benefited from the increased trade and investment that has come as a result of this growth. China has a long trading partnership with Australia, and they are one of Australia's largest trading partners. According to a post by The Guardian, more than 35% of Australian exports go to China, and about 20% of imports come from China. Canada, on the other hand, also has a long-standing relationship with China, but their trade relationship grew larger in 2021. A study revealed that Canadians' welfare is enhanced through the importation of goods from China. This is because the imports are important inputs to Canadian production. When Chinese factories produce less, they buy fewer raw materials from abroad. This decrease in demand can lead to layoffs and factory closures in the countries that supply China. There are also knock-on effects when Chinese consumers spend less. If they buy fewer imported products, this can lead to job losses in the countries that export to China. China's dominance of global demand for raw materials is well established. A 2017 post by CWR revealed that China plays a major role in almost half of the global supply of the most critical raw materials, and most of these materials are generally used in the green industry and ICT sector. For example, the country is the world's largest consumer of iron ore, accounting for over 80% of global demand. This is largely due to the country's massive steel industry, which requires large amounts of iron ore for production. A January post by Investopedia revealed that China is a major producer of steel, and a shrink in their economy would cause a ripple effect on the global steel industry. While other countries have attempted to increase their own iron ore production in order to gain a larger share of the market, they have so far been unable to match China's output. As a result, China's dominance of the global iron ore market looks set to continue in the foreseeable future. The property bubble in China is also a very real and pressing concern. The Chinese government has been trying to cool the market for some time now, but with little success. Prices continue to soar, and many believe that a major crash is inevitable. The real estate sector in China has also been one of the drivers of the country's economy for many years. However, with the fears that a property bubble may be forming, it would surely have devastating consequences for the global economy if it were to burst. There are a number of factors that suggest a property bubble may be forming in China. Firstly, prices for residential and commercial property have been rising at an unsustainable rate in recent years. Secondly, there is a large amount of unsold property on the market, which is a telltale sign of a bubble. Finally, lending standards for mortgages have become increasingly lax, which could lead to defaults if prices were to fall sharply. There are some who argue that a property crash in China is inevitable and that the world economy is unprepared for it. This is a highly uncertain time for the global economy, and we can only hope that China can avoid such collapse. According to a May post by China Debate, there are two ways a slow economic growth can lead a country to, one of which is through the sharp reduction in GDP and financial crisis, while the other way is through a long decade of very low growth. The post then stated that China could possibly not have a sharp economic collapse or financial crisis, but they could experience a very long, Japan-style period of low growth. This is based on a number of factors, including the country's high levels of debt, its declining working-age population, and its diminishing competitiveness in the global economy. A prolonged period of low growth in China would have major implications for the rest of the world. For one thing, it would drag down global growth rates. Also, the Chinese economy is much more dependent on exports than the Japanese economy was, and the Chinese government has been less effective in implementing stimulus measures. And finally, a slowdown in China would increase the risk of financial instability as investors seek to pull their money out of the country. So while it is unlikely that a complete collapse of the Chinese economy would lead to the end of the world as we know it, it could still have major repercussions on the global economy. Also, a reduction in the China population will have a dire effect on the world. Why are there so? Well, there has been speculation that China's population may be about to start shrinking, and this is due to a number of factors. The country's one-child policy, which was introduced in the late 1970s to help control population growth, is one of the main reasons why the population may start to decline. With fewer children being born, the population will eventually start to shrink, and if it does happen, it will have huge implications for the global economy. This is because China is a major driver of growth, and a smaller Chinese population would mean slower growth for the world as a whole. A July post by Reuters revealed that China's population has been slowing for some time now, and due to this, their population is expected to shrink further before 2025. The post also showed that the Chinese government has been trying its possible best to tackle this rapid shrinkage because many of their young citizens are opting not to have children due to high costs and work pressure. A shrinking Chinese market would also be bad news for companies that export to China. And if Chinese people start buying less from other countries, it could lead to a decline in global trade overall. So if China's economy collapses, the implications would be far-reaching and extremely serious. The world would be a very different place, and not in a good way. In conclusion, the current state of the Chinese economy is uncertain, and many experts believe it could collapse soon. If this happens, the global economy will be in trouble. Here are some tips to help you stay safe if the Chinese economy collapses. Keep your money in a safe place. If the economy collapses, the value of the Chinese currency will plummet. To protect your savings, keep your money in a safe place, such as a bank account in a stable country. Diversify your investments. If you have investments in China or Chinese companies, diversify your portfolio to reduce risk. Be prepared for a recession. If the Chinese economy collapses, it will likely trigger a global recession. Be prepared by stocking up on food and supplies and having an emergency fund. Stay informed. Follow the news closely to stay up to date on the latest developments. This will help you make informed decisions about your finances and your safety. That's all for today, guys. Do you think that the China economy can face a total collapse? Feel free to let us know in the comments section below. If you like this video episode, you can also check out this next interesting video. Thank you for watching.